Is your bank misleading you? RBI's new guideline reveals a big secret. Hello friends, imagine one day you go to the bank to take a loan. The bank officials explain the terms and conditions of the loan to you in a very simple and trustworthy tone. You trust their words and take a loan to meet your needs. You feel satisfied that now your EMI is fixed and you will not face any kind of problem. But after a few years, suddenly a notice comes from the bank that your EMI has increased. You're surprised how this can happen because when you took the loan, the bank did not tell you anything about this. You ask the bank but don't get any clear answer from there. Then you understand that perhaps the bank did not tell you the whole truth. Now think, if you knew all this beforehand, would you be in this situation? No, but now there is no need to panic. The Reserve Bank of India (RBI) has issued a new guideline which has decided that banks and financial institutions will now be obliged to give complete information related to loan interest rates to the customers. This new rule will give more transparency and control to the customers so that they can make their financial decisions more wisely. Today we will discuss this topic in depth. But before that, if you're new to our channel, please do not forget to subscribe to the channel so that you get the update of our every new video first. So let's start today's discussion without any delay. When a person takes a loan, the most important aspect is its interest rate. But do you know that there are two types of interest rates? One is fixed interest rate and the other is floating interest rate. The difference between these two is quite important, and understanding it can help in your financial decisions. First of all, let us know what is fixed interest rate. Fixed interest rate means that the interest rate fixed when you take a loan remains the same for your entire loan period. That is, no matter how much the interest rates in the market go up or down, there will be no change in your EMI. This is beneficial for those who want to make a stable financial plan and want to avoid any kind of interest rate hike in future. But it is also worth noting that fixed interest rates are usually 1.5% to 2% higher than floating rates. This simply means that if you take a loan at a fixed interest rate, you may have to pay more interest initially. But the advantage is that if interest rates rise in the market, there will be no effect on your EMI. However, even if interest rates fall, your EMI will not be reduced, which will not give you any additional benefit. Now let's talk about what is a floating interest rate. Floating interest rate means that your interest rate keeps changing from time to time. It's linked to a benchmark rate, such as RBI's repo rate or the bank's MCLR, marginal cost of lending rate. When the repo rate is low, the floating interest rate also decreases, which reduces your EMI. But if the repo rate increases, your interest rate and EMI may also increase. The biggest advantage of floating interest rate is that when interest rates are low in the market, you have to pay less EMI, which reduces your total interest payment. But its disadvantage is that if interest rates suddenly increase, your monthly EMI will also increase. This means that floating interest rate is better for those who are ready to take risk and who want to take advantage of the possible fall in interest rates. Now let us know what is the new guideline of RBI and what new options will it give to the loan takers. The Reserve Bank of India has recently taken a big step in the interest of loan-taking customers. Till now, banks and financial institutions did not give this facility to the customers to change their interest rate. But now RBI has made it clear that loan-taking customers can switch their interest rate. That is, if you have previously taken a loan at a fixed interest rate, then now you can change it to floating. And if you have taken a loan at a floating rate, then you can change it to fixed. This decision has been taken to give customers more control over their financial future. Earlier, banks used to do their own arbitrariness and did not give this option to the customers, due to which they were not able to take advantage of the changes in interest rates in the market. But now it has been made mandatory that banks provide this option to the customers and give them complete information. Now the question arises, which option will be right for you? Now that you have come to know about fixed and floating interest rates, you have to understand which option will be right for you. It completely depends on your financial situation, your risk-taking capacity and market trends. If you follow a fixed monthly budget and want your EMI to always remain the same, then a fixed interest rate can be a better option for you. This is right for those who want to do long-term financial planning and want to avoid any change in interest rates. But if you're ready to take a little risk and want to take advantage of the fall in interest rates in the market, then a floating interest rate can be better for you. This option is good for those who are ready to take a flexible approach to changes in interest rates while repaying the loan. Now let's know how banks can mislead you. Banks often do not give complete information to customers and mislead them according to their benefit. For example, many times banks advise customers to take a fixed interest rate because the interest rate in it is higher, which benefits the bank more. Similarly, many banks do not give information while giving loans on floating interest rates that interest rates may increase in future, which can cause huge losses to customers. Apart from this, when customers want to change the interest rate, banks charge them extra fees. But now RBI has made it clear that customers should get complete information and they should have the right to switch their interest rate without any hindrance. So friends, RBI's new guideline is a big relief for loan takers. Now customers can change their interest rate without any hassle and improve their loan terms according to the market situation. If you have taken a loan earlier, then contact the bank immediately and know whether you can change your interest rate or not. Did you find this information useful? Do tell us in the comment.
If our video has taught you something new, do not forget to like and share this video so that this information can reach others as well. Your likes and shares are a source of inspiration for us. If you have any questions or suggestions, please let us know in the comments. It will be our honor to answer your questions and listen to suggestions. And yes, if you like our content, subscribe to the channel and press the bell icon so that you stay connected with every new story. Thank you. GRT Business YouTube channel sources, news from various news agencies, opinion polls and other public sources. We try to ensure that every report and summary is accurate and verified, but we are not responsible for any dispute or error. Our aim is only to provide you with accurate information.